The stock and crypto markets have been on a roller coaster ride this week. There's a lot of uncertainty in the air, and there are also very few opportunities for investors to make money. So, what's an investor or trader to do? Let's find out. Hey everyone, welcome to Conquer Wall Street. First things first, I am not a financial advisor. This video is just for educational and informational purposes. With that out of the way, let's get right to the charts. First up, we have the Dow Jones Industrial Average, which lost 3% last week. But it wasn't just the Dow Jones that had its butt kicked last week. The S&P 500 was also down 3%, making for a very ugly chart. But the NASDAQ got taken behind the woodshed and beaten silly, dropping 4.5% last week. So, what's going on? What's moving these markets? Here's what you need to know. The stock market is all about future growth expectations. When the economy is good or expectations for the future look better than in the present, stocks rally. PE ratios, along with their average valuation metrics, rise because investors are confident that economic growth will continue and their investments will be more profitable in the future. But when future growth is starting to look not as expected or worse than expected, then stocks will fall and their average valuation metrics are readjusted to meet those new expectations. And right now, we have a ton of factors pointing to lower expectations for the economy. Let's name a few. Number one, market experts don't believe the Federal Reserve interest rate hikes will be able to control inflation. And number two, energy costs are bleeding the average American's purchasing power, with the national average price for a gallon of gasoline approaching $5 a gallon. And number three, retailer Target reported that their company growth was challenged by unusually high costs, resulting in profitability well below what we, Target, expected. These are just a few factors pressuring stocks. But from those mentioned, it's the Target news that scares me the most. And here's why. Publicly traded companies answer to shareholders. A shareholder's primary concern is the profitability of their investment. A company's biggest cost or expense is labor. And the easiest way to quickly increase earnings or profits is to reduce your labor costs. So now let's think again about those future stock expectations and their perceived valuation metrics. Is Target an anomaly? If it's not, the greatest risk to the stock markets is unemployment. And if we have an increase in unemployment with persistent, uncontrollable inflation, watch out below. Let's take a closer look at the charts for the S&P 500 and Bitcoin. But before we do, help out the channel and make sure you hit the like and subscribe buttons. Starting with the S&P 500, most of the technical indicators are oversold, so I won't bore you with the obvious details. The issue as I see it is, do we get an oversold bounce in the market, or does the market get ugly fast, dropping further from what it has already dropped? Let me provide a little bit of clarification. When we look more closely at the chart, we can see that the S&P 500, the price is trading below the 200-day moving average. And we can also see that the 50-day moving average is trading below the 200-day moving average. So yes, we're definitely in a bear market. But by definition, we're not in a bear market until the market has lost 20% from its most recent high. And that most recent high occurred on January 4th of this year, when the S&P 500 traded at 4,818. And when we look at this chart closely, we see that we're floating right around that 20% area, and the S&P 500 is trying to form a base. I fear if we don't get that oversold bounce, that if we cross below that 20% threshold, we could have dramatic losses from here. But investors and traders shouldn't be surprised by the bear market. Take a look at the chart of the average price to earnings ratio of the S&P 500 compared to the chart of the index. This is a chart I've been watching long term, and here's the reason why. It gave an early indication of the market correction. Notice that the multiple that investors and traders were willing to pay was decreasing before the market actually corrected in January. What I'm looking for on a long-term basis is to see the price to earning multiple that investors and traders are willing to pay increase instead of decrease. As it stands right now, we're closing in on the same price to earnings ratio investors were paying just prior to the end of the COVID crash. And we haven't seen a flash crash in this market. So the S&P 500 looks terrible, but that doesn't mean we can't get a wicked bounce from here. I say this because the VIX, or the volatility index, has been hanging around the 30 range since April. This indicates investors are paying a hefty premium for downside protection in the stock market. And any good economic news could push the S&P 500 back up to its 50 or 200-day moving averages in the short term. Typically, when the VIX is up around this 30 range, good news can have an effect of creating a short squeeze that catapults the markets higher. If we get a bounce, the logical first target would be around $415 on the SPY ETF. At this price, we can see a couple of price support clusters. We also will be hitting the lower end of the 1-year volume profile, which lines up nicely with the 50-day moving average. I think the 50-day moving average is going to provide strong resistance because there's just too many bearish factors in the market right now. Some of you might be watching and thinking this economic and technical analysis is confusing. You might be interested in learning more about my mechanical trading systems. Current systems are for the SPY ETF and Bitcoin. And I'd encourage you to register for my upcoming release at conquerwallstreet.com. If you provide your email there, you'll receive more information about these systems in a few days. Just know, I'll never ask you for your email or solicit you in the comments below. For the 10-year period from April 2012 to April 2022, these systems have produced an impressive 87% win rate for the SPY ETF and 75% win rate for Bitcoin. Let's move on to cryptocurrency. Bitcoin is king of crypto. So where Bitcoin goes, altcoins follow. And what I'm watching in regards to crypto is the Bitcoin dominance chart. At the top of this chart is the Bitcoin US dollar pair, and at the bottom is the market dominance, or Bitcoin's market dominance compared to altcoins. Notice how the price declined, but the dominance chart went sideways. Looks like a clear rotation away from altcoins to Bitcoin as a safety valve. But what really stands out to me is the jump in dominance we see Bitcoin had the last 2 weeks. Notice the price of Bitcoin's gone sideways, but there's been a large jump in market dominance those same 2 weeks. That raises the question, can Bitcoin bounce from these levels? Well, the answer to that question is definitely maybe. There is no certainty with Bitcoin because in times of market panic, it moves in correlation with the stock market, as we noticed back in the COVID market crash of last year, when the Bitcoin price and the stock market prices crashed together. But we have a technical indicator or two that stands out to me. The first of these technical factors that I'm watching closely is the RSI. When I look at the RSI on this chart, I notice as Bitcoin's been going sideways the last 2 weeks, we have a divergence in the RSI from an oversold level. To me, this gives me the inclination that there could be a bounce in Bitcoin. The other chart that really stands out to me is the weekly chart of the Bitcoin US dollar pair. When I look at this chart, I see immediately that price is hovering around the 200-day moving average. And just a couple weeks ago, the price sharply bounced off of the 200-week moving average. Historically, the 200-week moving average has been a strong area of support, and rarely does Bitcoin close below this level. The other thing that stands out to me on this chart is the weekly RSI. Historically, the weekly RSI has provided excellent entry points in Bitcoin whenever it closes below the 30 level. Now, the current chart is showing that Bitcoin is above the 30 level, but I'm keeping a close eye on this as a potential long-term entry point should it close below 30. And if we get a bounce in Bitcoin, how high do I see this bounce going? Should Bitcoin bounce, I estimate that it could hit the range of 34 to 38,000. And that's because we have multiple points of resistance all coming together. We have the downtrend line that began in December of 2021. We have the 200-day moving average, the 50-day moving average, and multiple price points throughout the last year, all acting resistance in that area of $34,000 to $38,000, or in that range between the 50 and 200-day moving average. So there's a good chance we get a bounce, but I fear an unexpected news event could void this possibility. Here's some of the current news events I'm watching that could unexpectedly cause us to move down. The first thing I'm watching would be the USA getting involved militarily in a war or conflict. Take notice that Biden says he would defend Taiwan's military if China were to attack. Mix that together with the conflict going on in the Ukraine, and we have a recipe for disaster. The other story I'm watching is the story about monkeypox. If COVID-19 shut down the country and crashed the stock market, it appears as though the news is starting to pump up monkeypox. My hope would be that history doesn't repeat itself, but COVID-19 began with the same type of warnings. And with monkeypox being a variant of smallpox, it could have a more severe outcome than the COVID illness did. Thanks so much for watching. Let us know in the comments below what you thought of the video and what analysis and information would be most helpful to you in the future. And as always, don't forget to hit the like and subscribe buttons and give us a visit at conquerwallstreet.com, where you can register for our upcoming pre-launch event. Have a great day.